Hey everyone, it's Josh, the Construction CFO, and today I wanted to walk through WIP reporting with you. A lot of this is going to be fact-based. I'm going to throw in a couple opinions of my thoughts of whether it's worth doing or not, but at the end of the day, it's up to you. It's your business. Is it something you want to invest time in to do things the full proper way, or are you good with just looking internally and having them give the outcome that you want or need? If you guys like content like this, that's operator focused toward actually running a business instead of just doing everything perfect, please like and subscribe. Hit me up with a DM or leave a comment. I'll make any video you guys kind of want to see. These are just things that come up every day, and I make content to help you run better businesses. And with that, let's just get into it. All right, we're going to start off by looking at just typical WIP reports, but before I even get into that, let's talk about what is a WIP report. WIP report stands for work in progress, and this is something that bonding agencies and lenders look at external of your business, and you internally want to have a copy that you look at to see how things are trending. It helps you see your backlog. It helps you see how everything maps out financially all in one place. So definitely recommend you find one. This is an example that comes out of Control Core. It's the software that we use. You can do whatever you want. Some people do these manually. Some softwares do it for you. But I'm a proponent of using software to do a lot of work like this. We're going to dive in. I'll explain kind of how it all works and what this shows. And then at the end of it, I'll get into a lot more in depth of what a perfect WIP report might look like. Just keep in mind that a WIP report is just one piece of a big financial puzzle. You still want your profit and loss. You want your balance sheet. You want all of your job costing intact. Otherwise, it doesn't matter what you show in a WIP report. It's not going to get a bank to give you money if you have negative equity. So just keep that in mind. We're going to start off with the very, very, very basic WIP report. This is going to have your customer, your project name, your project number. This is so you can keep track of everything. You can talk in the same language as your team. I see a lot of people, they'll call a project what they want to, what it reminds them of, a nickname, maybe a street. But if you aren't using the same one as the office or what's in the accounting system, it already just throws off the flow of where things need to be job cost and all of that. Very basic stuff, guys. Project stage, I like to keep them separated. We have ones that are under, like, course of construction actually happening. Maybe it's pre-construction, maybe it's warranty stage, or maybe it's closed out. But we want to show a little bit of everything to help give the full picture of your business. Maybe you have some that were really big wins and now they're closed out. We can show that. At the same time, maybe you have some that were struggles along the way, and you can talk through them and explain what you learned, what you saw, that kind of thing when you're giving this to other people. For internal, we just want to, like, all I really care about is, let's look at the ones that are active. And as an active, I mean, I haven't collected all the money and it's still open for warranty. So it has a risk of cost. So that's project stage, original contract. This one's very straightforward. It's straight off your contracts. It's cut and dry. Approved change orders. This is a hot topic for some reason. It shouldn't be, but approved change orders are fully executed according to your contract. Not written, not verbal, not whatever else, not emails, not texts, not IOUs. This is literally not even time and materials. This is literally an approved change order, an extension of your contract. Otherwise, you're not guaranteed any of it, and it's not worth putting on here. You got your original budget. This comes out of your estimating. How much is it going to cost you to build your project? And if you don't know, that is a first sign that you need to implement job costing, because it'll help you understand how you're making money in your business, what you're good at, what you're not good at, instead of just doing all of it just because you can. We have approved, committed change orders or commitment change orders. That's fancy language in this report for what's my budget for my change orders. So if I have a $100,000 change order, I'm going to spend $80,000. $80,000 would go here. The next two lines are what we really care about. We look at actual build and actual costs. So actual build is how much have I gained for revenue? How much have I billed minus retention? You want to track retention separate. Otherwise, it can muddy your AR report when you send it to a banker. And they send it to underwriting, and underwriting looks at it with 10 different people. Everybody's going to ask the same question. How come we are so far underbilled? Or what's going on with X, Y, and Z? Or why haven't we collected on this AR for 80 days or 150 days? Even though it's retention, even though it's explainable, that just slows the process. So if you keep them separated, it helps everybody just move through the process faster. It cleanly dictates exactly what's going on. And the point of a WIP report, as far as like looking at this part, something you can take away from it, actual build and actual cost tell you, are you overbilled or underbilled? If you're underbilled, is it because you're losing money on a project, or is it because you haven't asked for enough in a billing? Those are good things to know. So if you look at these, I've billed 535,000. I've only spent 388. On the next one, I've billed 501,000, but I've spent 624. Like, I'm eating $130,000 right now. And before I get too far in, I want to explain too, actual costs are very nuanced in accounting systems. So you can't just pull a report as of today and say, what are my costs? Because if they're not reconciled, you could have double entries, you could have missing entries, you could be making decisions off of horrible information. So what you want to do is look back at the last month that was reconciled. Typically you do that every month by the 10th of the month. If you're a big company, maybe the 15th, because there's so much data. But what that allows you to then, like, the way we would look at that then is, say it's March 5th. It's the 17th right now. Maybe it's March 5th. We're looking at January book close because it's been fully reconciled. February might have duplicates still or might be wrong. But if you do it after it's reconciled, after the books are closed, now I can look at February and I have a whole other extra month of data. And that's super important for our industry, specifically with weather and delays and all of that kind of thing. When you're coming out of the slow season, you don't want to look at January and make decisions when February is a very different month. It's such a swing month, whether it's ups or downs. So just my 2 cents. The billing, something that you really have to get good at and understand, is making a cadence for billing and holding your clients to that standard. That's something that we preach to our clients. If you bill on the 25th of the month, they have till the 30th or the 1st of the next month to make changes to it. After that, it needs to sit and stay the way it is. So what we actually do is we try to invoice by the 15th, and then we can tell them, like, you've had this for 15 days. How are you now finally getting around to fixing it? Like, we're not going to change our accounting for you. It just adds extra work and it slows down your reconciliation and your process. So my 2 cents. The last thing I wanted to show you on this WIP report is it shows you that we have a $198,000 contract, and with a $168,000 budget. We've spent more than our budget, $185,000, but we've actually billed more than our budget. So why would that happen? That could be a double entry. That could be we have a change order that we're not aware of. There's a lot of things with this. When you see both higher, it's probably a change order. The problem now is, I don't know, is it a $50,000 change order, or is it a $20,000 change order? Or is there more work that needs to be done that I'm not even aware of? Maybe it's a T&M. So it's super important to keep these on there until you are fully demobilized, no more warranty, because it can change. I've even seen people go back for warranty and have to do T&M because something, outside of scope happened. So just best practices. Think of this WIP report as like a very basic version to get your foot in the door when you're doing bonding and lending. This helps them know that you're tracking your overbilling and underbilling. It helps show that you're tracking your change orders and your contract versus budgeted. It's not perfect, but when you couple this with job costing, it's really quality. and it helps paint the picture and tell the story behind the numbers of what's actually happening. So we're going to dive into the next WIP report. This is actually one that was sent to me by a bonding company. It's pretty standard. It doesn't matter what the format looks like. What matters is this is a picture, a piece of the big puzzle that all needs to align, and they all need to say the same information. I'm going to say an opinion right now where that's called gap accounting. I don't believe gap accounting is worth the time investment when you're under $10 million because it is a lot of tying out percent complete, cost to date, like assumptions that people under 10 million, unless you are really good at job costing, you're making improper assumptions. And so you're tying it out, spending a lot of time on something that's actually wrong. So to me, not worth it. To you, maybe it is. If you do it, you have a lot better bonding capacity. It helps build the case for you. But again, if it's just building the wrong case for you, it's probably hurting you more than it's helping you anyway. So that's my opinion. Now we're going to get back into like factual. This is what it actually says. This is what it means. What they like to see in theirs typically is what's the project name, the ones in progress, what's the contract total, what's the estimated total, what's the cost to date, and what's the build to date. These are backward from the other page I just showed you, but we'll use it anyway. When you fill out those 4 columns, or those 5 columns, I guess, it calculates everything else on this sheet. And so this is where another opinion, where banking and lending and sureties, they understand the industry, but they oversimplify percent complete, estimated profits. It's such a dynamic thing in construction because you don't just buy a piece of labor and it's guaranteed to perform. You don't just buy the exact number or amount of material at the exact cost you estimated 2 years ago. You might have some leftover material. You might have to overspend and buy today's pricing for rock because you didn't buy something in time. There's a lot of nuances, so I don't, putting on my project manager hat and my operations hat, like we have to be nimble, but putting on the financial hat, we also have to play the game and do it the way that they want to see it. So I would not run a business off of these numbers. I would only give this information in this format to people that require it. This is kind of outdated information and incorrect a lot of the times. From what I've seen, that's my experience. But I'm going to stop with the opinion now. I'm going to get back to the facts. So your estimated total profits, this should just be a subtraction. What's your contract minus your total cost? Your total cost in here, this is going to include your change orders. Same with contract price. You add change orders into those. It's not just your original. Versus the other sheet we looked at, it showed separated. I think it's important to see them separated. You can see if you're making money on change orders or not. You can see if you're actually, like how you're trending on everything, especially when you job cost it that way. Percent complete, they look at it as estimated total cost divided by cost to date. And that's technically right. But when it comes to the functionality, that could be wrong. Like we just talked about in the last WIP report, if I don't have a receipt in there for cost to date, or if something's double entered, it's going to throw everything off. So I wouldn't throw much stock into those. Don't try to line them up so they're perfect, because it's just a number that is calculated based on what is shown. Profit earned to date, same thing. It's basically the percent complete times your total contract price. So it tells you out of that 903,000, you've technically made 83,000. I wouldn't go run my business off of that, because that 83,000 could be higher or lower. We have no real idea. Then we have our revenues per or earned to date. So that is really your contract times your percent complete. Sorry, the profit was your estimated profit times percent complete. And this helps you see, like, you should be billed 471,000, but you're technically billed more than that for this percent complete. And so on your balance sheet, you should show a liability. You still owe $63,932 worth of work this month. And again, the reason that I don't like to do that for just for any construction company, it's kind of difficult, but because I've been in operations, I've seen too much. But if I say that I'm going to make this much money and then tomorrow something gets uncovered and pipe or whatever, it's underground, we thought we had something, but we did it wrong. Like, those numbers change almost every day. So it doesn't make sense to me to put in all the extra effort to put it in your balance sheet. Again, that's the way that bankers want to see it. It seems like it's not worth the value to me, but if you value bonding, you're going to want to do it. So it just takes a little more effort. But if you see, like, on the other side, if I show that I'm earned revenue in excess of billings, I have an asset. So I'm waiting on $10,000 more than what I've actually done so far. I want to show that as an asset on my balance sheet. Cost to complete, it's basically just what's left over after your estimated cost and your cost to date. If you're job costing properly, which you should be, especially if you're doing this big of projects or you're trying to get bonded, you need a job cost. Otherwise, you have no idea what you're doing. It's literally just guessing. But what happens with that cost to complete is it's inaccurate. We don't know. You need a job cost. You can see every line. Is it rock that I'm overperforming or underperforming? Is it the labor? Is it a floor 2? Is it slab? Is it underground? Is it phase A? I don't know. Those are things to run a business you need. Those are things as a bank, they don't really know or care to know. But you can prove it. You can prove that these numbers are right. And then you have what's left to bill. That's just nice to know. It helps you make sure, if you're filling this kind of thing out every month, that you're billing for every single dollar out there. And sometimes you bill for it and they lose the invoice, so you have to make sure you track receiving it too. You have a column here for gross profit. What was the profit that we estimated it at, or that it's currently at, plus change orders? And then what's the future profit to earn? So what's remaining profit that we have left after the stuff we've already made? So 903 minus 82, 765 is going to be year 820. And that's essentially a big WIP report. Again, it needs to tie out with other reports. You can't just have this and fill it out really well and then hope you're going to get bonded. You have to have a good balance sheet. You have to have a good debt to equity ratio. You have to have a lot of other pieces in there. You have to job cost. You have to have a P&L. You have to actually know what you're doing, not have legal problems. There's a lot of issues that go into it. But yeah, that's WIP reporting in a nutshell. If you guys have anything else you want to see, hit me up, DM me. I'm happy to make another video to show you what we know, what can help you build your business. Thanks.